Live from Hong Kong, this is Insight with me, Yvonne Mann, where we dive deeper into the stories that matter with crucial context and sharp analysis. And we start with trade chiefs from some of the world's major economies are jostling for access to the U.S. Trade Representative, Greer, as they gather in South Korea for the APEC meeting. A big question there for the markets is whether the U.S. is pushing to include FX pledges in those trade deals. However, Bloomberg's learned that seeking a weaker dollar may be off the table for now, as it's above Greer's pay grade. Oil also falling for a second day on a report that Iran is willing to forego nuclear weapons in exchange for sanctions relief.
I hope the Iranian leaders understand that what you're doing and really what you're doing for them is a big favor. We want to have this end peacefully, not horribly.
President Trump praising Qatar for helping with Iran. He also heads Doha. Thanks for giving Boeing its wings back with a record $96 billion deal for wide-bodied jets. Well, welcome. Well, we'll talk about the markets here, and we are seeing some caution across Asian stocks and markets there really falling for the first time in 5 sessions as investors really take a breather now to assess what this U.S.-China trade truce means. Meanwhile, I take a look at the dollar. That's in focus, of course, as we talk about this APEC trade chiefs. They're gathering in South Korea this morning. Bloomberg has reported that U.S. trade officials are not seeking to include currency pledges as part of trade deals. Let's bring in April Hong. She joins us with more on the reaction in the currency markets. And according to our sources, April, it seems like the U.S. is really trying to dispel those rumors out there.
Yeah, and it's really interesting, Yvonne. I mean, in spite of some of these headlines that we're hearing, that traders seem to have made up their minds when it comes to the dollar, and they're really focusing on the fundamentals. It seems the path of least resistance on the greenback for them is a downward trajectory. I mean, you're seeing it losing ground today against almost all its G10 peers, including the euro, including the yen, and this is coming despite, right, what we're seeing in U.S. 10-year yields breaching that 4.53 level as traders continue to pull back their bet of Fed rate cuts for the year. And the greenback certainly is a currency that hasn't been benefiting this year from higher yields. Now, I'll flip the board and take a look. I just wanted to recap for you what we've been seeing on the dollar, Bloomberg Dollar Index to be exact, for much of this year. If you take a look at where we were at the start around January 20th, the time of Trump's inauguration, we've pulled back about 6% since then. And it's really this unwinding of the narrative of U.S. exceptionalism. Now, flip the board again. Certainly one of the pairs that we're watching very closely today is dollar Korea won, because we did see a bit of weakness on the Korean currency at the early goings today, but it's moving stronger at the moment. And this is against the backdrop of these trade talks getting underway, right? And our colleagues at MLive have already been highlighting appreciation pressure to be expected for the Korean won. You think about how Korea runs a trade surplus with the U.S. The currency is also on a U.S. Treasury monitoring list, along with some other Asia currencies. And then there's also the element of how it's seen as a currency that, even though it's appreciated this year, is still seen as significantly undervalued. You think back to September, October of last year, following the political turmoil in the country. Overall, it's been that weakness that we're seeing in the Korean won. So trade certainly figuring into the equation when we look at FX today, Yvonne.
Yeah, first it was Taiwan dollar, maybe Korean won is the next one to watch there. April, thank you for that update as well. As we mentioned, though, the U.S. Trade Representative Greer is the man in the spotlight as trade chiefs from APEC nations jostle for access to him at the conference in South Korea. That's where we find our chief North Asia correspondent, Stephen Engel, joining us live from the event on Jeju Island. And Steve, there's some pictures that you mentioned that he was there. I can't imagine what sort of circus is going to be there around there. Everyone trying to get his attention in some way.
Yeah, and that's what basically Greer told us this morning. He was one of the first people to arrive this morning. As you saw that photo taken by our producer, Sabrina Mao, she was in the right place at the right time. But he essentially said, we are not doing media now, essentially because his schedule is pretty darn packed. And he will be meeting most likely tomorrow, we're hearing, with the South Korean trade minister, of course, as these two nations are trying to reach some sort of trade trade truce as well going forward during this 90-day reprieve time. And South Korea is the host nation of this trade ministers meeting here in Jeju in southern South Korea. We also, in the last hour, we did get the APEC policy support unit coming out with their economic outlook for APEC's contribution to global growth. And it's a fairly dire outlook, given, of course, this research probably culminated through the Trump trade war without taking into consideration this 90-day truce. But still, the headwinds are in place. Essentially, APEC growth to slow, according to the APEC policy unit, to 2.6% in 2025, 2.7% next year. That's down from a robust 3.6% in 2024. So a sharp drop-off because of the uncertainty. The uncertainty, according to the APEC Policy Support Unit, is hurting business confidence and leading many firms to delay investment. So that's going to be a recurring theme here. But again, absolutely right. We're likely to see many of these 21 member economies from the APEC region to try and get face time with Jameson Greer, the U.S. trade representative. We also have his counterpart, Li Changgang, who is the Vice Minister of Commerce for China. He is definitely here. So those two are kind of counteracting each other. Maybe there's not the golden opportunity, if the U.S. delegation was not here, for China to try and get more face time with a number of these different economies throughout the Asia Pacific that might want to also, get the support from China as well.
Yeah, you're checking out the who's are there. Steve, what about who's not there? It looks like Japan is a no-show. What do we know about these trade officials skipping this APEC meeting?
Yeah. Well, this is an interesting development because, again, the Japanese have already indicated that they do not want to have a hastily rushed interim trade deal with the United States if it does not include autos. Keep in mind, autos create, that whole sector create about a third of trade and GDP and about 8% of the Japanese workforce. They don't necessarily want to see auto tariffs on a sectoral basis damaging their domestic industry. So they would want to see autos included in any kind of deal with the White House and the Trump administration. So that was already put out there before this ministerial meeting, trade ministerial meeting here in Jeju. So the trade minister, Yojimuto, he is not here. His second in command is also not here. So it's left to the state minister of trade, Masaki Oguchi. He is here, but unlikely to have any kind of progress necessarily with lower level officials coming, and potentially, even if they do have FaceTime, with Jameson Greer.
Steve. Thank you, Stephen Engel, there, our chief North Asia correspondent, joining us from Jeju Island here this afternoon and morning, I should say. But joining us right now is Kristin Hull, founder and CEO at NIA Impact Capital. And Kristin, it's great to have you here on the program. Obviously, there's been a lot of talk about how markets have really rebounded, especially stocks. Globally since Liberation Day. It's almost like they forgot about this whole big tariff. And this de-escalation with China certainly has been quite prominent in the last few days. What's your take right now? Are you more inclined to lean towards risk?
Hi, Yvonne. Thanks so much for having me. And yes, you're right. It's like people have forgotten what is happening and that we're still in very volatile times. So we are looking to those companies that have lower risk. So whether that is because of their strong human capital management, because of where they're positioned in the economy, we are certainly looking to de-risk portfolios, and we have seatbelts on, ready for more volatility ahead.
You mentioned about the de-risking. There's a lot of debate about whether it's time to diversify away from the dollar and dollar-denominated assets, in particular here in the region. Where are you on this whole debate on whether the dollar is still going to be that big dominant currency in the world?
You know what? We are all have a lot of uncertainty here in California as well. So we are watching some of these trade negotiations. We are watching to see what the current president and the words coming out of the White House as far as what happens for the global economy. And of course, our tariffs and our relationships across borders absolutely affect the dollar. And so will we need to shore up as far as in the U.S. and be doing more of our own, as we're seeing trade relations are currently being disrupted, and other organizations, other companies and other countries are reorganizing where they think about who they're going to do trade with, and that's going to affect all of us in the U.S. as well.
Yeah, how are you looking at the tariff impact on margins, on earnings of some of the companies that you hold right now? And what are you doing with your U.S. investments in particular?
Sure. So we're actually looking at products and services specifically across our portfolio, and we're looking to see where there are relationships with China and where tariffs might be, what might they be now, and then what might they be in the future, and then where, of course, are products and services being sold. So are they being sold in the U.S. or are they also being sold globally? So these are all of the situations that we're monitoring. One of the things that we see is being completely missed in the headlines this week, or particularly for last month, is that our shift in energy policies and our energy usage in the U.S. have shifted. And so that's something I think that's been missing that we're certainly monitoring here in the U.S.
Yeah, I was going to get your take on that. Since you are an impact investor, the White House, I mean, we've heard a lot of rhetoric, right? President Trump wants to introduce tax legislation that would potentially overhaul this whole decarbonization tax credits in the Inflation Reduction Act. Republicans have also talked about, putting basically a scalpel on the IRA. Is there still sort of opportunities then in this space?
It turns out after this week, we are seeing that there are still opportunities. And I think the entire market, at least in the U.S., is really reacting to the fact that the Republicans' kind of soft offering of what this proposed bill would be has not completely eliminated tax credits, both for wind and for solar, particularly those built in the U.S. And so we did see in our own portfolios and then across the grid, as we talk about it in renewable energy across wind and solar, and then battery-supported companies as well. And so we are seeing that. In conjunction with that, we're also watching the energy usage in the U.S. And March was actually a milestone record-breaking month where it was the first month that renewable energy sources, particularly wind and solar, replaced fossil fuels for the first time in U.S. history. So that's a pretty big deal because it does signal that there is a shift happening, not only globally, but within the U.S. as well.
Talk us about the theme about, Europe is also looking for some sort of energy independence away from Russia as well. Are you looking more opportunities in Europe now, too?
Well, absolutely. And I would say Europe is really leading on this, largely due to geopolitical situations and really needing energy independence from Russia. And so they have been leading not only in the standards as far as setting global standards for carbon emissions as well as for water use. They're also really moving as far as getting away from the pipelines and wanting to have that independence via both solar and wind. And the U.S., despite rhetoric coming from the White House, is actually following suit, and we are doing the same here as well.
Can you tell us about other themes that you're looking at as well, Kristin?
Sure. So lots of things happening across our portfolio, and one of the things that's also happening in the U.S. is as the different trades and the soft dollar and the organizations get reorganized as far as our spending habits and our consumer habits, we're also shifting our consumer habits across lines that we see as values, and then also kind of loyalty of consumer. And so there's been quite a bit of anti-ESG and also anti-DEI, so environment, social, and governance, and then also diversity, equity, and inclusion issues within the U.S. And that has caused consumers to shift into kind of trade sides. So companies like Target that have rolled back their DEI efforts have seen lower earnings, and they've also seen really empty aisles in their shops. And now moving to companies like Costco that are doubling down on their DEI efforts. So American consumers are showing that human capital management really does matter and really does affect their shopping and consumer habits. And we're seeing that across companies. So different companies, their leadership and their brand and their loyalty really matters during these volatile times.
Yeah, Kristin, maybe before we go, I want to ask you about whether U.S. tech, I mean, this is obviously has been a darling for many foreign investors out there up until maybe, the tariffs and the like. I'm just wondering, do you expect tech to really be leading this rally that we're seeing in the U.S.?
It's a good question, as we call it here. Some call it the Magnificent Seven. Some call it the Horrible Seven. There's the seven largest U.S. tech leading companies, and they have been holding up the U.S. market really for the last year or so. I think the uncertainty is going to have some really interesting issues there. of course, leading in AI development and adoption. That's something that's already currently disrupting the world commerce and the working employee as we see it. We're also seeing that it's going to disrupt energy use, and we're looking at green data centers. So we do see that the large companies are currently leading, though there's a lot of room for some of the smaller caps and the mid caps to grow, particularly with some of the sustainable solutions that they're developing.
Yep, I'll get more on your tech plays coming up here. Kristin Hull, founder and CEO at NIA Impact Capital. She's sticking with us. Well, coming up, Boeing makes a comeback from crisis driven by a record deal with Qatar Air. We're going to ask whether the company's massive backlog will pose a challenge to meeting that order. This is Bloomberg. All right, taking some movers here this morning. The chip space very much in focus after what we heard from President Trump, and really talking about these massive floodgates of deals when it comes to AI, led by the likes of NVIDIA. So this Mideast trip for the president certainly reaping some benefits there for the tech space, and certainly a lot of questions about how this benefits the likes of NVIDIA, AMD. They're said to be some of the main beneficiaries of these deals as well. The chip space is, though, a pretty mixed picture this morning. TSMC is not doing a whole lot. Samsung, though, catching a slight bid here. SK Hynix and SMIC both selling off this morning. Let's bring back Kristin Hull, founder and CEO at NIA Impact Capital. She's still with us. I look at your top holdings here, Kristin. I know TSMC is still very top of mind. Given that we're starting to see more deals coming through from the U.S. and the Middle East, certainly likely benefiting the likes of NVIDIA, how do you look at TSMC now that it seems like these trade tensions have simmered down?
We've been very bullish on TSMC for a long time. Certainly has been under question, particularly with the Taiwan and whether Taiwan relations with China will impact that. And yet now that we're seeing possibly a semblance of trade loosening up between U.S. and Asia broadly, we're pretty excited about the company.
It's interesting, though. I was looking at what you hold, and out of the Mag 7, you only hold the likes of Apple. Can you tell us why, and what metrics do you look at now?
Sure. Well, we of course, that has changed the way we think about the market with those 7 companies really largely holding the S&P 500, at least in most of the large UCAP across the large U.S. Companies. We have specific focus in that we need to see all of our companies have solutions-focused revenues, products and services coming from one or more of our 6 solution themes. And then in addition to that, we need to see diversity and leadership across both the executive board, the executive team, and the board of directors. And so our company portfolios are really focused across ed tech, where there's educational services, some communications. So there are some of those that fit into the Mag 7, though largely we are out.
And NVIDIA is not part of that. Why not?
There's a lot of questions about AI, and we could spend a lot of time on this one. There's certainly benefits that are going to come from AI, and we need to be really clear on what those benefits are going to be before we can stand by that company. And so, yes, some of the integration we're seeing, across workforces has been exceptional, and yet there's going to be some harms, some of it to the economy and some to society. And so we're waiting to see what that is. One of the other pieces we're watching is what that means for the energy consumer and for our planet. And AI has such an intense energy usage that we're really looking more toward data centers right now, and who's going to have the best place on green data centers, because to be able to store all of the data and then also to be able to cool it, large water use is pretty intense on both energy and data. And so that's really the solution that we're looking to in that space.
Okay, green data centers. I'm just wondering, what's the best way to express that in the market then? I mean, in terms of staying invested in this AI theme, I know you're focusing more on REITs, for example.
Exactly. So some of the where we're looking at green construction as well as solar, and then also really looking at really careful care of water. So that does tend to bring itself into the REIT sector. And then also just AI, we are AI adjacent, and some of our companies really are fueled literally by AI. So one of those companies would be in the tech sector as well, which is Duolingo. And while merits of AI can be questioned, there isn't anything that we can't really talk about as far as disrupting the way that languages are learned, and then also the accessibility. So they really have covered that market and are expanding globally as we speak.
It's interesting, right? When people in this market look at these Trump-era trades, it is, certainly something that they look to. But I think, Kristin, in some ways, you are kind of a contrarian to some of these trades. When you look at clean energy, for example, how long can you stay, holding these sort of investments, given that, we've seen that Trump policy is very unpredictable and can really spark massive, massive sell-offs and rallies in this market?
So that's a question for the portfolio manager, right? So we are definitely have seatbelts on, and we're also really carefully allocated in a really diverse way across about 9 different big sectors. We're also diversified across revenues and across geographies. And then, as I mentioned, we're diversified within each company. So we're looking for the very best management and human capital management across each of our companies so that employees are loyal and so that governance and executive teams really can manage and navigate through what is a lot of pivots and a lot of turns in our economy these days.
Yeah, I'm going to get your take. I mean, you are an early Tesla investor, and I know you've shifted Tesla from some of your client funds to a separate activist fund, and you've talked about, maybe, what Elon Musk and what he's doing with Twitter might actually be harmful to, the EV makers' climate mission. The stock in some ways has rebounded recently. I'm just wondering, what could instill more confidence for you around this company?
That's a good question. So you definitely have to have your seatbelt on when investing in this company. And largely it's governance for us, because from the very beginning, we were very interested more in the battery play than in the actual vehicles. And no one can deny that these vehicles are not beautiful. They're absolutely some of the best on the market. And yet, with lack of governance, lack of strong governance, and lack of a full-time CEO, we've seen the company falter. And so they have not met their targets as far as car releases, and then also we're seeing sales in their major markets are dropping while competition is increasing. And so we're looking across California and across Europe, where Tesla really did hold the market, and now sales are dropping. And what's more concerning, I think, that gives me pause is that, as I mentioned earlier, Americans in particular are really aware of the brand, and they now don't want to be associated with the CEO. And so if the CEO can't continue to really improve the brand and to have consumers be very proud to drive that Tesla. In America, we really very much, cars are an extension of our personality, and it's almost our own brand. And so we want to be seen in a car that matches our values. And until the CEO can improve that image for himself and for the brand, we have a lot of pause on that company, despite so much potential, both on the environmental side, on the battery side, as well as on the solar roofing side. There's so much potential there, and yet we have pause, and we are not investing.
Kristin, great to have you. Kristin Hull there, founder and CEO at Nia Impact Capital. Coming up, we're going to look at how oil prices are reacting to reports that Iran could agree to a nuclear deal if it receives sanctions relief. This is Bloomberg. And continue to see a down day when it comes to crude, and really on the news of what we've been hearing potentially of a deal when it comes to Iran with the U.S. So that was what NBC was reporting earlier here this morning. And this report basically says that Iran is willing to forego nuclear weapons in exchange for sanctions relief. We're 2% lower for Brent as well as WTI here this morning. And President Trump has also praised Qatar for help in negotiating with Iran, saying the Gulf state is working very closely with the U.S.
I hope the Iranian leaders understand that what you're doing and really what you're doing for them is a big favor. We want to have this end peacefully, not horribly.
For more, let's bring in Bloomberg's Jumana Bershetschi joining us from Abu Dhabi. And so she's been following President Trump's trip in the Middle East. And Jumana, I mean, a lot of news on whether we're going to get this deal. How soon could we hear something, you think?
Yeah, so the last couple of days, actually, the focus has maybe shifted away from the deal making, and certainly there's been a lot of splashy headlines being thrown around about the respective deals between Qatar and the U.S., Saudi Arabia and the U.S., to regional security. And after his one-on-one meeting with the Emir of Qatar yesterday, President Trump did say that Iran had come up in the conversation. Qatar had been quietly playing a diplomatic role on those U.S.-Iran talks as well. And later in the evening, in an NBC News, one of the advisors to the Supreme Leader, Ali Khamenei, did say that Iran are considering agreeing to no further enrichment of nuclear material in exchange for a deal with the U.S. and, of course, sanctions relief. And you've got to think about it from the Iranian perspective now. They are on the back foot in every single way possible. They've had their proxies weakened over the course of the last 6 months, with Hezbollah severely diminished, Hamas on the back foot, that Houthi detente with the U.S. They're economically in a very severe situation, and the Ayatollah himself is getting old. He has to think about succession. There is public pressure to ease economic standards and living conditions. And so we are beginning to see a bit of daylight emerge, perhaps a softening of the position on the Iranian side due to the many attempts, not just by the U.S. to engage with them, but also their Gulf allies in the region. And that is one of the reasons that President Trump, in addition to those deals, has presided over that GCC Leaders Summit yesterday, where Iran also came up. He mentioned it in that very seminal speech that he gave in Saudi Arabia the other day, whereby he did say that he wants to do a deal, but if Iran, quote, continues to export terror, they would not hesitate to resume that maximum pressure campaign. So all of this is happening in the background, but it certainly does feel as though things are moving in the right direction in order to secure a deal. The question, of course, is how this deal is going to differ from that Obama deal that was introduced in 2015, JCPOA, which Trump pulled the U.S. out of. Ultimately, it is about stopping Iran from obtaining a nuclear weapon.
And Jumana, I mean, you mentioned the deal making continues, and you know, you were with the president in Qatar. I'm just wondering, what exactly did we hear? I mean, obviously the Boeing deal is something that is really making headlines here, but how significant are these sort of landmark deals?
So I think there are a lot of numbers being splashed around. Yesterday, there was also an announcement regarding a $1.2 trillion economic agreement. I should just note that that is an agreement. It is a pledge to create $1.2 trillion in economic ties, economic trade between Qatar and the United States. Nothing firm. But the rest of it, that $200 billion number that you may have read, is actually firm, and that includes that massive Boeing deal worth about $100 billion, the largest order in history. Qatar Airways have placed an order to buy these Boeing jets, a firm order of about 160 with the option to buy another 50. That is about $100 billion, so really significant. And we had the chance to speak to the Qatar Airways CEO a couple of weeks ago. He hinted that a big order was coming. I didn't expect it to be quite this big, but certainly that has caught a lot of attention, and that is a firm order. Also, defense deals on the agenda as well. And don't forget that later this morning, before the president makes his way to Abu Dhabi, which is where we are right now, he's going to be doing a tour of the U.S. airbase, Udeid Air Base in Doha. And that is one of the reasons why they also have worked towards signing further defense deals, because of Qatar's significant role militarily as well for the U.S. in the region.
All right, Jumana, thank you, Jumana Bershetschi there. And we're going to get more on that massive Boeing deal with our guest, an expert in aviation issues, who has directed projects for clients ranging from small airports to global companies. Mike Boyd is president and CEO of Boyd Group International. Yeah, you know, Jumana did talk about this record deal that Boeing just signed here with the Qatar's Airways. I mean, 200 wide-body aircraft. It's certainly a big news, given just the crisis that this company has been dealt with for the last couple of years. Is this going to be Boeing's big comeback, you think?
Partly a comeback. Now, keep in mind, President Trump dragged them across the line here because, remember, this is an airline that was very unhappy with Boeing. They canceled a 50-airplane order somewhere in the past and gave it all to Airbus because Boeing couldn't deliver 737s. So they weren't a real happy camper as the global customer of Boeing. So what the president just did is brought them back and also brought a tremendous economic impact to the USA over the next 30 years. So I think it's good news for everybody, very bluntly.
Tell us about the backlog, right? Because some have said just given the amount of backlog, it's going to take years to kind of clear it. And you know, really the key issue is not just about getting orders, but really kind of filling them and ramping up production.
There's no question about that. And Boeing has to come to the party. Remember, as I just said, this is an airline that canceled an order for 50 airplanes not too long ago because Boeing couldn't deliver. Boeing has to come across the line. You know, they had the president come up to the line for them. They have to now produce. And keep in mind, their problems are not over. They still have, what did they deliver last month? Something like 40 airplanes. That's like, you know, 2/3 of what Airbus delivered, and Airbus has its own problems. So right now, the people at Boeing have better come across as of very quickly, or they're going to be in very deep trouble.
What can they do to increase input, you think, Mike?
Well, it's been, you know, as we've gone over 1,000 times in the last year or so, Boeing was a very mismanaged company for years. It focused on stock price rather than putting out airplanes. And as a result, it became very, very sloppy. They're getting better by the moment, but they're going to have to get some limitations taken off on their production. There's still a 38 a month for 737s. It should be closer to 70. They have production problems at their Charleston, South Carolina production center where they put out 787s. Cleaning those things up in the near term being the next 12 months, is going to be critical. Watch that.
Can we at least say, Mike, that the bad news around this company is behind us in some ways, that maybe there is not quite a high bar now for things to actually improve? At least we ended the strike late last year. We're getting some news now of a potential thaw, according to our sources, between the U.S. and China, and maybe China is thinking about removing that ban on Boeing deliveries. Can we just say the worst is behind us for Boeing?
It is to a degree. Keep in mind the China thing. China cut Boeing out years ago. The airplanes that are being delivered, they've been sitting on the ground for 5 years. So Boeing has not gotten a big order from China for 4 or 5 years. China politically has cut Boeing out. Getting back in is going to be more an issue of what goes on in Beijing than what goes on in Seattle. And we'll see what happens there. But nevertheless, Boeing right now has more orders that they can put out productively over the next few years. That'll be the big thing, with or without China. So again, we have an entity with a huge backlog, and they've got to get up to be able to meet that backlog. The President of the United States and the U.S. government has come to the party for Boeing. They now have to produce.
How soon do you think jet deliveries can be restored in China then? And that these carriers in the mainland can actually get the planes they need?
Well, keep in mind, as far as China goes, these are airplanes that were ordered years ago. And delivering, there's like 50 left that have been sitting there literally for the last 4 or 5 years. China has not made an order for Boeing airplanes, not a major order in the last 6, 7 years. That's a political thing. So coming back into the China market has everything to do with the folks in Beijing and much less to do with with Boeing's ability to produce the airplanes.
The stock itself, though, has recovered from the losses since Liberation Day. I just got to wonder then, Mike, you know, the manufacturer seems to be quite exposed to what the president says. It's almost like a trade proxy in some ways. Do you think that's actually a good or bad thing?
Well, it's good or bad makes no difference. It's better than not having it. But keep in mind, Boeing having been a very mismanaged company for years, they got a new management team in there. They've got production problems. They got all kinds of other issues that they're working on. Cleaning those things up over the next 12 to 18 months is going to be critical to making this Qatar thing work, as well as the rest of their backlog that's out there, because there's only 2 players in the global game now, and it's Boeing and Airbus. Embraer is just not going to be able to be up to it. China has nothing really that can be sold. So Boeing has a market there that wants its airplanes. They better be able to produce them.
And you mentioned about the new leadership under Kelly Ortberg. I'm just wondering, what more would you like to see from this new CEO?
Well, keep in mind the things that were uncovered over the last few years with a very mismanaged company. Literally, mechanics at Boeing working on airplanes with no records, things like that. That, I think, is going to be fixed right now with better oversight. And the new CEO understands that. They got new people put into the production side of it to bring that up to snuff. So I think they've got what they need to move ahead, but they've got to keep their eye on the ball and not go back to what they were before, worrying about whether the stock price was X or Y. They got to produce airplanes.
Mike, it's great to have you. Mike Boyd there, Boyd Group President and CEO, joining us. And of course, we're going to track all things, not just what it means for oil prices, but also what it means for the Fed as well, just given that the trade negotiations have actually looking a little bit more positive of late. And of course, all these different sort of deals that are being had in the Middle East. We did speak with former New York Fed President Bill Dudley. He says while the U.S. and China have dialed down some of the tensions on tariffs, many unknowns still remain. The Bloomberg opinion columnist told us that the U.S. central bank has no choice but to wait and watch, despite pressure from President Trump to cut rates now.
They don't know where the tariffs are going to land, number one. And two, they don't know what the effects of the tariffs are going to be on growth versus inflation. So they're uncertain about two dimensions. So they can't really just sort of flip a coin and say, oh, well, we're going to worry about the growth dimension, because that could turn out to be wrong. So they have to sit and wait for more information. I mean, if you were driving a car in a thunderstorm, you wouldn't just put the car on autopilot and hope that you would get through it safely. So you pull to the side of the road until the weather cleared up, and that's what the Fed has to do. The Fed is going to be criticized for waiting. They have to wait, and because they're waiting, they're probably ultimately going to be late. But it's not the Fed's fault. I would behave exactly the same way in this set of circumstances.
But what's their definition of late, and what's your definition of late? Because he reflected on the move last summer, and he said, in some ways, we were a little late, and other people thought he was being preemptive. What's late to you?
Well, I think late is responding only after you've seen a sizable increase in the unemployment rate, because at that point, it's really hard to avert a recession. When I evaluate the risks to inflation versus the risks to growth here, I guess I worry more about the downside risks to growth. But the Fed can't put all their marbles on that side of the equation, because inflation's been running above the Fed's target for 5 years, and if they're wrong, and inflation expectations get unanchored, then it's a really difficult problem getting inflation back down. So I think they have to wait. Because they wait, because they will be forced to wait, they'll probably be late. Trump will blame the Fed for being late, but the reality is Trump created the conditions that forces the Fed to have to wait.
Bill, I'm just curious, going forward, how much you see the Fed unwilling to move, even if the unemployment rate rises by 0.5 percentage point, which is sort of the trigger that a lot of people are looking at, if you do see those inflationary pressures coming back?
Well, I think if the unemployment rate rose by, above 4.5%, that would change the Fed's calculus. They would be much more worried about the self-reinforcing deterioration in the labor market leading to a full-blown recession. So I think the unemployment rate is really the single most important indicator. If it stays around where it is today, Fed's going to just sit and wait. If the unemployment rate starts rising quickly, then the Federal Reserve will start to respond. But I think it's going to take some time. I mean, the hard data on the economy shows that the economy is still just fine. I mean, the first quarter GDP report was very misleading, because it was mainly the fact that that they couldn't count inventories properly to match up with the big surge in imports.
Bloomberg opinion columnist and former New York Fed President Bill Dudley there. Well, coming up after the solid earnings from Tencent, we look ahead to Alibaba's numbers, which are due later on today. And investors are closely watching updates on its aggressive AI plans. This is Bloomberg. All right, India opens up pretty soon, and you take a look at what we're looking at, and certainly it's going to be about Reliance here. And take a look at how the open is faring out so far. It's slightly lower here by about 0.1% on the Sensex. Reliance, that's the big one. So they're getting a nearly $3 billion in the biggest India loan since 2023. So that certainly is going to be some good news for the company here. The loan that we're hearing here is split into a $2.4 billion tranche there, and also signed on May 9th, and involves about 55 lenders. So certainly does highlight the appetite that we're seeing for some quality assets in India, with foreign currency loans to India companies surging. So India still emerging as a bright spot for growth there, and still remains that tech darling, or should I say darling overall. But then again, we're watching what foreign investors are doing, because it seems like after this record run, or at least a big buying streak here in 2 years of 16 consecutive days, we've seen foreigners actually sell. So bucking that a little bit. But certainly one to watch is Reliance. Shares not doing a whole lot here this morning. We're looking at tech earnings in China in particular, and we're looking at Alibaba's results later on today to keep up with the earnings momentum after what we saw with Tencent posting its fastest revenue growth since 2021. The stock of Tencent, though, heading lower, as well as with Alibaba here this morning. Let's dig into what to watch from Alibaba and bring in our Bloomberg Intelligence team, Robert Lee and Catherine Lim. Catherine, you always focus more on the core business with Alibaba. Yeah. What are we expecting?
Right. We've got so much to cover tonight from Alibaba, ranging from Taobao Tmall, that's China consumption, AIDC and China, and we're talking about US tariffs and how that's going to impact AliExpress and their overseas e-commerce business. And let's not forget local services, delivery. We touched on that for JD.com and Meituan. So that's the three big elements that we're going to be watching out for, and updates from, Alibaba. Are they, number one, how are they doing with China consumption? Where we are right now, and given the 90-day reprieve that we are seeing on the trade side of things. To AIDC and China, how are they going to actually help? A lot of the exporters from China, etc., expand into other markets outside of US, and is that going to take a toll on AIDC and China's earnings?
What are you looking at in terms of any commentary on tariffs? And how does it impact Alibaba, you think? Yeah,
again, it's a 90-day trade, reprieve that we're looking at. And more importantly, if we look at the export numbers from last week itself, China is making inroads into new markets, whether it's not just the EU, but, new markets like Africa, right, and the LATAM. So we've actually seen the e-commerce companies, not just AliExpress, but Temu, Shein, they're also making inroads into those markets. So I think we might actually get that indication that, they're going to try and actually go and diversify into other parts.
Robert, you mentioned earlier it's all going to be about AI in this earnings report, for you at least.
Yeah, I think if it wasn't for the various headlines we've seen on tariffs in recent months, then AI would dominate the debate and the conversation as we saw last time. So I guess going back to what Catherine said, Alibaba is much more potentially exposed on the tariff front than maybe a company like Tencent. So I guess there'll be a lot of focus on that. But the core growth strategy for Alibaba really is positions itself in AI as an AI play. Without exaggerating, they're going all in on AI. We saw the sort of big bang announcement on CapEx last quarter. Yeah. So I think there's going to be a lot of focus, particularly on their cloud intelligence business, the rate of growth, which will likely accelerate. So I think that will catch some headlines. And also we would be looking at the rate of margin improvement on that business. There's a natural degree of sort of operational gearing, so that should continue to improve. And also, I guess they will update on their announcements on the development front. So their main large language model, the Qwen family of models, I'm sure we'll hear a lot on that. So I think that's all well and good. It will certainly make headlines. It will drive sentiment. But again, sorry for being a broken record on this. For me, it's all about monetization. Yeah. I think they are monetizing on cloud, but I would argue that it's still a relatively small part of their net earnings, so it's not a big enough driver. Yeah. It's not big enough to move the needle at the bottom line. So it's a sentiment driver rather than an earnings driver. That's the way I look at it.
Have you put any numbers on it, on how long it's going to take for this whole investment in AI to really become a good business and growth multiplier for the company?
Well, we've got the e-commerce expert across the room here from me, so I think it's more a question for Catherine. I think that, there is momentum in cloud AI, but that is well known and well understood by the market. Maybe the top line and bottom line can come a little bit ahead of expectations. Well, I say that. I think there is an expectation that will happen. Yeah. But I think the reality for Alibaba is it's an e-commerce play. And if you sort of wind the clock back, 24 months ago or 18 months ago or so, their market share was under attack. There were concerns on the headwinds in the Chinese economy. They seem to have sort of stabilized the ship and back on the growth curve. So I would say, realistically, the e-commerce business is the primary driver of earnings upside for this company. Yeah, there's a little bit of upside on the AI front, but realistically, it's e-commerce. Sentiment-wise, ignoring the tariff noise, definitely AI is what's driving sentiment towards the stock. But I think if you go back to and I'm sorry I don't have a copy of our deep dive report here, the sort of secondary headline there was China AI, progress, not profit. So in other words, Chinese companies, including Alibaba, are very well positioned to continue making technological progress, but in reality, it's not going to be a major driver of their earnings, certainly not this year or next year.
Would you agree?
Yeah, I'll just add to what Rob had said. A lot of the AI is now going to be integrated, if not they have been embedded into whether it's Taobao, Tmall, even remember Alibaba talk about integrating the AI also into their latest on-demand service that they have relaunched and, kind of like going into it together with JD.com and Meituan. So for us to actually see the monetization opportunity, it may take a little while and it may not be that obvious, but if it actually feeds into them securing their market share in China as well as overseas, I think that's a good sign.
And Robert, me to end with you. How are you looking at Tencent's AI strategy versus Alibaba's right now?
The way I've described Tencent, they're a very conservative management team. They play the long game, which I'm sorry, I don't know if that's a British expression or whatever. They're taking a long-term view. They're not in a rush. They avoid the hype. They avoid the headlines. Like Alibaba, as Catherine just said, the way that they can monetize AI in the near term is to apply AI within the different businesses to drive cost and efficiency savings. So, for example, there was talk about using AI to target ads, and there's some evidence that that is helping, support margins in that business. But again, I would say that's not having a transformative effect on their earnings outlook. That's the advantage for these big tech platforms. They can apply it internally. The smaller startups don't have that luxury. But as again, was it 2 years ago, roughly, we had the big reorganization at Alibaba, we had the change in management. It's been a more tumultuous couple of years. Now they've gone all in on AI, so it's up for them to deliver.
Robert Lee and Catherine Lin from BI there, thank you so much for your time. And before we go, here's a look at our show tomorrow. Piramal Farmer Chairperson Nandini Piramal joins us exclusively. We'll discuss the outlook for Indian drug makers as President Trump seeks to cut prices. Plus, more on Indian markets with Macquarie's India country head Abhishek Podar. And later today, Bloomberg will be live at JP Morgan's annual Global Markets Conference in Paris, speaking exclusively with the CEO, Jamie Dimon, for his outlook on markets and politics. That's at 8 p.m. Thursday, Hong Kong time. That's it for us here on Insight.